So you and I have different trading strategies. I can pretty much almost guarantee it. And I was green every single day this week. Does that mean that you can't be green this week because we have different trading philosophies or different trading strategies? The answer is no. But I feel pretty confident that we're both green, not because of our strategies, but because we have one thing in common. And that's really what I want to talk about in this video. The thing that I think, frankly, is the most important thing when it comes to day trading. After years of blowing up accounts and prop firms, this, that, I made a simple change and everything changed for me and I became a profitable trader. And if you're not profitable right now, you're in the red. Take a listen, see what I have to say, see if you can make some changes and turn yourself green as well. So for some simple context, guys, I am a mean reversion trader that is using VWAP bands at 1 standard deviation and 2 standard deviations to give me my entry. That's really the short story of what my strategy is. And this video is because of a DM that I got from a friend who's trying to learn this similar strategy. And if we look down here, this is the ES. I only trade micros between the ES and the Dow. And he asked me about this spot right here at about 9:45 in the morning. Said to me, hey, Brad, are we short right now because we just hit -2? And I said, no. And he said to me, hey, I thought we go short at -2 as long as we're not out of day up, meaning outside yesterday's range. So if we look to the left here, guys, we were not outside yesterday's range, right? So if I say out of day up, that means we're outside yesterday's range, which is right here. I have an EMA here. We weren't even close to that. So why the heck was I not going in here? Now, the reason is because we have to ask ourselves a couple of things. When we enter a trade, the most important thing, right, is where is your stop loss? Now, to me, that just translates to where is my risk? When I enter a trade, I assume that it's probably not a good entry. I assume I'm probably early and I am willing to take drawdown. So for example, if I go short at the +1, I need to be prepared to put on another order at the +2. This is not adding to a loser. It's just knowing that I might be early and I'm going to average in my price to get myself the best price possible. And this is why I trade micros, because I can't take this amount of heat and then some more heat if I'm trading minis. I'm going to blow up my account. So when I enter here, I need to think about really where is this trade going to be invalid and where would be my next point of entry if I really wanted to. And this is really over here on my 30-minute chart, really the high of the day. You can see these are global cursors, so you can see on the right, it was pretty much the same exact thing. I would have felt more comfortable, even though it's not in my strategy, going in short at the low of the range 2 days ago, as well as my EMA. And furthermore, I want to be able to give myself enough heat to really enter at the top here at this range. This is the high of yesterday's range, and I love to use that as a rejection point. So even though I'm looking at the -2 here, really my favorable entry, which is against my strategy, is an entry here for my first entry and my second entry here. Then I can start to think about a stop loss up here. What this is and what this skill really means to me is being able to manage risk. When I see people trading minis, especially with the NASDAQ, which is like having a crackhead mow your lawn, they're thinking about, all right, it goes against me, and they have to stop out because of their P&L before the trade is even invalidated. So I did not enter here because I was not willing to take heat all the way from 37.5 all the way up to 70.25, and then still have all my entries in and still have to take on some more heat. Now, in this case, it made me look like a donkey. It rejected right off the -2s and it went back towards my target. I would have hit my target wonderfully. It pretty much dove right to it, I believe. I would have exited. I'm trying to go line to line. Boom, there's my exit. So would it have worked out? Yes, but we have to look at the big picture. I needed to manage risk because missing that trade, it's early in the day, it's 10 o'clock in the morning, I have time to think about another trade. And now I'm coming back down into the range. I'm like, okay, if we go up and we see the -2s again, that EMA is still coming down. Now it starts to align and give a little bit more confluence for my first entry. I can take the heat now up to my second entry. Now I only have 2 micros on of the ES, okay? I only have 2 micros on. and then I could take a little bit. My daily loss is $250. I haven't hit that in a very, very long time. Okay. So now I'm watching. Now I'm in a situation where I could, once again, take my short here to VWAP. But we also need to have, on top of risk management, I think a part of risk management is looking outside the framework of a structure, of a strategy, and looking at market conditions, right? If we go back to where that entry was, we have to think about what's going on. The entire week this week, we've been selling off, pretty much going back down to November lows, okay? We've been selling off the entire week. Are we going to try and maybe find a spot to maybe rally? I don't predict the market, but I am reacting to what is going on in the market. And pretty much since 5 o'clock in the morning to that point, these are 30-minute candles, 1 hour, 2 hours, 3 hours, 4 hours, 5 hours, 6 hours. We had almost 7 hours of a little micro trend upwards where the buyers were in control. We had 2 little red doji candles, but everything else was in the right direction. So not only am I thinking, all right, yeah, I'm at the plus 2s, but we're pretty close to going out a day up. We have a trend line above. We have a range that I like to trade off of above. And is this going to be the day that we recuperate some of the entire week's losses? Guys, that is not strategy. That is managing risk. That is saying to yourself, I do not need to be in a trade right now. This is saying to myself, I am going to wait for a better opportunity. And I was never able to do that. I always had to be in a trade. Or I was always reading somebody else or following somebody else's strategy and thinking to myself, oh, they said to go in now, or they said to do this. You need that screen time to be able to say, hey, listen, where is my first entry is great. But Warren Buffett said, I want my first entry to be my worst, right? I want to be in early. I don't want to be late. So I assume that I'm going to have to go in again. Once again, why I trade 1 micro, because it's not about that 1 micro. That 1 micro is just the little teaser. I plan on going in for a second and a third. I take 3 max. So not only am I thinking, all right, we got a plus 2 here that I need to short, but I better be ready to short again. And then I better be ready to short again. And then I better be ready to take my heat before I'm officially stopped out. So trading with an appropriate size, especially if you're trading a prop firm account where they tell you it's 50,000, but you really only have $2,500 worth of drawdown, which means you're really only trading with 2,500. Unless your entries are perfect, unless your trades by Matt, you are going to have to take some heat and some drawdown. And you are not going to be able to do that with minis. If you're trading minis, you are going to find yourself stopping out before that trade is invalidated. This is all risk management. Risk management isn't so much the dollars and cents or the P&L. The risk management is knowing where's my first entry, where's my second entry, where's my possible third entry, but more importantly, am I going to be able to take heat to stay in this trade until it's invalidated? Now, granted, in a perfect world, we would like that invalidation to be close to our entry, but that's not always going to be the case. So now let me show you an example of later in the day when I entered a trade and I had to think with the same mindset. And in this case, I took heat. I will post somewhere. I'll post it like right here. Let me see if I can frame it out perfectly. The P&L of this trade, I was in drawdown the entire trade, but I want you to see something. Number one, the little spikes. What the hell happened there? I'll explain and I'll show you and we can talk about it here. But also, what was my maximum drawdown and what would that drawdown have been if I was trading minis on the ES, not micros? So at 1047, we had a -1 touch, which is an entry point for me. For whatever reason, I just wasn't ready to take that trade. Frankly, I just wasn't ready to take a trade, whether I was going to the bathroom or something. But I got back and then boom, 1055, you see that green arrow. I am long there targeting VWAP. But as soon as I enter that, I know that I better be prepared to enter again down here at the -2s. And also, I really need to be prepared to enter one more time my third contract. At this time, I had to look at the low of the day at that point. That would have been my third entry. So -1, -2, and then the lows. And if I can't take the risk of 3 contracts, I'm going -1, and then the lows, I'll probably skip the 2. Or I'm going to take the -1. When I get down to -2, I'm going to take the loss on the -1 and then wait for the on the -1 and then wait for low of day. The second point, and a part of risk management, is being able to take losers to better your position. Now, I've been told before that this is just like, I'm going to keep averaging down until it eventually goes in my favor. That's not the case. I have very, very structured entry points and where I want. Like I said, I'm thinking about risk first. You must think risk first. I can point to you 100 people that have had $1,000 winning days. I cannot show you many people that have gone an entire month without losing $250 in one day. The ability to not lose more than $250 in a little prop account for a long amount of time, that's what's going to separate you. And that's the thing that I need to notice. I need to notice that I have an 80% win rate with this strategy, that if I have one $250 day, that's fine. I'm going to make it back with my green. And I'll get in Tradzilla. I'll show you all the trades from this whole week in case you think I'm just an idiot or I'm just lying to you, okay? The second one here happened to be the point of control, so I was willing to take that point as well, knowing that if we got down to the low of day, I was going to take off that -1. I probably tried to cover that -1 already. Yep, there it is. I covered that -1 there right at the trend line because, like I said, I'm thinking -2 and I'm thinking low a day. So now I'm in for 1. And I took a loss there, but I'm willing to take that loss to better my position, right? My break even went from here to here by taking that loss, still targeting that -1 line. I get to -1, I covered again. That's my target. I think this ended up being a scratch. Pretty much break even, maybe even down a couple dollars, but I got in. I took my second at what that time was point of control. I covered to take a loss, knowing that if I targeted, I get myself back into a pretty good spot. Okay, so now we are back to the -1s. I am long again, targeting VWAP. Now I'm entering again right down here at this swing low. There's going to be my second entry point. I took a third one, now knowing that this one was probably not going great for me and I was going to want to look to cover that. There's the cover. So now my break even goes from here and it drops down. Now I'm long 2 and my break even is down here pretty much at 59. I took the second one off. Now I'm in for 1. That was a profitable trade. I am now green for the day, still long 1, and now I have enough room that I can enter at the -2, and I'm still thinking about that low day. I went long again right there at the swing. Now I'm in for 2. I'm good to go. Covered, took that off. Now I'm really green for the day, doing okay. Came back in now. So now we're just like I said, I'm in, covering. These are little scalps just to get myself back from this initial this -1 loss, right? I had this -1 loss down here, but now I'm still just trying to cover and get it back, slowly chipping away. These don't have to be big wins, especially with micros. I'm long, right to -2, cover, pretty much got back up, and this trade ended up being good. Nothing great, but for how much it was in drawdown, almost $150, I got out of this trade green by being willing to take a loss, manage risk, and knowing that I had more entry points below. If I didn't think about the entry points below, I would just be thinking, oh my gosh, I'm red. I got to average down. That's dangerous. But knowing where your entries are and knowing that this -1 was a soft entry for me, that makes things align beautifully. And the rest of the day, we just chopped around inside that bid zone, never got anything else that I really wanted to. And after that trade of being in drawdown and getting out alive, that was good enough for me. I ended the day on the accounts between $10 and $9 across 10 accounts. That's totally good for me. Let me dive into Tradzilla and show you exactly what the week looked like. So here's the 10 account. This is 5 Apex accounts. I do have a code down there to get you the best discount available. And I also have some Lucid accounts. I don't have any codes. Let Lucid know that maybe you should give me some codes. I like Lucid because I can really go nice and slow. There's no reoccurring. But so far we are at profits on all these accounts, $3,200 over 2 weeks for Apex, 1 week for the Lucid accounts. Trade win rate 83. Okay. Trade expectancy, $10. Like I said, a lot of losses, a lot of gains, but $10 at a time will get you $3,000 over time. The last time I had a red day was last Friday, all green. This right here was probably my biggest loss day. It wasn't quite my daily risk budget, but it was not a great day for me. So yeah, nice little week. Things are going good. If we look at the different accounts, I'm pretty close to passing them. Let me see exactly how much I have till I pass these evals. So with the Apex evals, my back is against the walls because now we only have 30 days to pass them. So I need to average about $86 per day to get that done by April 2nd. If we don't, I'll just have to YOLO a little bit. It's not YOLOing if the account's going to be gone. So this Monday, Tuesday, Wednesday of that week, maybe we'll live stream. But all I'll do is probably just go up to 5 or 6 minis, 5 or 6 micros instead of a mini. But so far, the Lucid account's making me look like a genius. I'm not. I just had a very, very good week. I saw the markets clearly. So right now, and you can see I find my averages. That allows me to find a daily risk budget. I'm averaging $72 right here. So I have $889 till I pass these Lucid accounts. My 3 best days is how I find my average. So yeah, if you have any questions about the strat or anything like that, if you agree with me, tell me what your strat is and tell me why risk first is not the most important thing when it comes to day trading.